In this video, we're going to discuss one of the most insidious taxes that the government has, a tax on you after you die. It's called the estate tax, and we're going to unpack it, figure out what it is, and let you know what you can do about it in this video. Yeah, estate taxes are one of the most insidious taxes that there are. In other words, they're coming after you can't even defend yourself. It's after you're dead. This is crazy, right? You've paid taxes all of your life. And now after you die, your heirs have to pay even more. So think about it. My dad did a study years ago that says we pay more than 100% of our the amount we make in taxes. And it didn't sound right at first, but if you think about it, we really do. And I have another video on this, but the bottom line is, think about it. Let's say you're a W-2 employee. You make $100,000. Well, 30% of that is taxable. And so that means you're left with, say, $70,000, maybe even $60,000 if your tax rate's higher, but we're just using $100,000 now. So let's just say you're left with $70,000. Then you've got to pay property taxes if you own real estate. Then you have to pay sales taxes on anything you buy. That's 7%, 8%, even higher in some places. If you go on a vacation, you have to pay something called an occupancy tax in certain towns, and that can be up to 10 to 15%. You pay value-added taxes, excise taxes, franchise taxes, fees on your credit cards, fees on your telephones, your cell phones, your cable bills, your utility bills. There's all kinds of taxes everywhere. There's state and local taxes if you live in a taxable state. The taxes never end. And just because you're left with $70,000 doesn't mean you can spend it, because you got to start paying taxes just to live your life. So if you think about how that money circulates and you pay that tax, you got to keep making money. You got to stay on that treadmill in order to be able to pay the tax. And now when you die, if you get over $11.7 million in your assets, your total assets, you've got to pay even more money. If you have less than $11.7 million, you don't have to really worry about the federal level, but the state levels you certainly do, and in many states, like about 12 different states. And so you've got to kind of figure out what's going on. So let's talk about the different state taxes and how they work and how they come after you, even after you're in the grave, and they nail your heirs if you didn't do your proper planning. And so before I go to that, I just want to tell you, a few years ago, there was a guy named Joe Robbie, and I always remember this story. Joe Robbie was a successful person, made a lot of money, had everything all set up for his family, even bought the Miami Dolphins and built a brand new stadium they called the Joe Robbie Stadium. It was kind of between Fort Lauderdale and Miami. It's still a stadium that's in use today. It's just not called Joe Robbie, and I'll tell you why. When he died, there was, let's call it an $800 million or $400 million, I don't remember what the number was, a $400 million tax on the estate, which basically means that his heirs, they didn't have $400 million lying around to just give to the IRS. So they had to sell things to raise the money to be able to pay for that. And they had to sell things, when people knew that they were at a disadvantage. They knew they had to sell this property in order to pay the taxes. So they didn't get the best deal when they sold it. They had to sell the stadium that their dad had built, that he put his name on. He worked all his life, and he had to basically give that away to the IRS because he didn't properly plan. Or you can say it's an unfair tax on the dead, however you want to look at it. But the bottom line is it's a reality, and you have to know that it's reality and plan for it. So let's take a look here on the screen at some of the tax rates that are here. Now, the way this works is you pay tax on a marginal difference. So the taxes go up to 40%, and it's amounts greater, okay? It's amounts greater than. So like I said, on a federal tax rate, you don't have to pay taxes on anything under 11.7 million. But once you start to go over 11.7 million, you could see how it works. So if you just look at the first column, if you make $1,000 to $10,000 taxable, that's over the 11.7, the taxable rate is 18%, but they give you a base tax. So it starts with some base tax, and then it's 18% on top of it. It's a little easier to see when we really extrapolate. So let's say if you're like some of my clients, you've got $1 million taxable amount. And that's taxable at the 40% rate. So the base tax is $345,800, and then it's 40% of the taxable amount. So if you look at that, if you make $1 million, you're talking about $745,800 in tax if you have an estate over 12.7 million. Now, I don't know about you, but I've already paid my taxes. I've done my duty. I've done my fair share. Think about what you pay to the government, right? You get paid, but then you're taking taxes out for Social Security, and it is a tax. It's not your money. It's a tax. Whether you get it or not, that's a different issue we're going to discuss at some point. So you've got Social Security, FICA, FUCA, all these other different taxes that come out. And then, you're paying all that all your life. And then at the end, they go, hey, can I have some more? We'll take it from your heirs. They didn't work for it. Well, I don't know about you, but that doesn't seem very fair to me. And so I'll give you an example. Let's say that your estate is valued at the time of your death, $12,120,000. And that means your total taxable estate now is $420,000. That's the amount over the $11.7 million, $420,000. So in the right tax tier, if you go to that tax tier that's 34%, you're going to pay $70,800, plus you're going to have to pay an additional $142,800, which is $420,000 tax at 34%. The total state tax for that particular transaction, if you're just over the edge, is $213,000, goes right to the IRS. And so what can you do about this? We can complain about it. That doesn't do us any good. We can act like a victim. That doesn't do us any good. And if you listen to my channel, we don't believe in acting like a victim. We believe in taking information and acting on it. And the 7 and 8 figure investors that I work with, I encourage them to get a hold of their estate plans early, because I can tell you, my dad just died last year, and even though it wasn't a huge estate, it still created a lot of problems for the heirs. And that's because the proper planning wasn't done. And so if you do the proper planning, you can mitigate or eliminate some of these taxes. Now, before I tell you what you can do, let me tell you, there are other states that have their own estate taxes, and some that have an inheritance tax, and some that even do both. And so you've got to watch out for those. And so you need to research what state you're in and see what the ramifications are for you, not just now, but in the future when you build up an estate. If you built a business, you built a portfolio of real estate, you built a portfolio of stocks, bonds, and options, those are going to be taxed. And so you need to make sure that you're on top of that. How can you do that? Well, start by planning. Talk to some tax experts, some tax advisors, some people that know, and you might have to get 2 or 3 opinions, because this is not an expert field for a lot of people. If they don't deal with a lot of high net worth individuals, you're going to probably want to talk to somebody that does, and it's worth it, believe me. Secondly, you can use vehicles and asset structuring to properly plan. So you can use insurance that pays off on your death so that your heirs don't have to sell things, your family farm, or your properties, like in Joe Robbie's case. They can just use those insurance proceeds to pay off the IRS. Now, you have to pay for that during your life, which is not the most pleasant thing, but hopefully it'll be a lot less than what you would have had to pay on that marginal amount. So there's lots, and then there's ways you can structure things using, other corporations, offshore corporations, having things owned outside the country, having things owned in different names, all legal and legitimate. However, make sure you don't skirt the laws, because the IRS has very, very long tentacles that they're going to come after you with. So make sure you do everything legal, and that means making sure that you plan properly. So properly planning, insurance. And by the way, you can start to reduce your estate before you die. You can start giving gifts. You can see the gift levels if you just do a little bit of research on what the gift levels are for a certain year. But start gifting your kids, getting those things out of your estate, so they're going to get it anyway. Might as well give it to them now so they don't have to pay those big estate taxes. So bottom line, it's not pleasant. It's not a great subject to talk about, but if you do the proper planning, you can avoid this insidious tax called the estate tax, and I hope you do.
How can we help you? 5 ways. First, subscribe to our channel and click the notification bell below to make sure you get our new video the minute it comes out. Second, get a copy of my book, Hacking Money, and you'll learn a system for creating wealth through passive income so that you can build the lifestyle of your dreams. Click where it says book below. Third, If you want to hit the ground running, or if you want to learn how to invest from someone with over 44 years of investing success, click the products and programs link below. Fourth, if you want to accelerate your path to increase your wealth, consider joining one of my ecosystems. I have mentorships and mastermind programs for learning that are practically guaranteed to make you a successful investor. Or if you want to travel the world and learn from me and other multimillionaires on the path to greatness, you should consider joining my elite mastermind group. Fifth, if you want some help right now because you have a burning issue, you need something solved, you want to create massive passive income, or you want to accelerate your results in your investments, or maybe you just want personalized mentorship to build the lifestyle of your dreams, we can help. Maybe you're a multimillionaire who just wants someone else to handle some of your investing decisions and you want to invest in one of my funds. Whatever it is for you, click on the link below where it says Become a Client. All those links are below. You create your world, nobody else. And remember, never give up your power in your health, your wealth, or your time.